Hello, good morning, everyone. Welcome, traders. Welcome, YouTube. Welcome, everyone, to this morning market update. I hope everyone is doing well today. And we got a decent bit to talk about, right? What the hell happened yesterday into the close? The afternoon, Jerome Powell comes in and absolutely annihilates whatever bear there was, right? People talking about Fed pivots, people talking about all this and that, right? Realistically, stronger buy stop run. In this, and we have officially crossed over the 200-day average here on the SPY and are hovering above it. So we had a very, very bullish close to the day yesterday. There was some lingering of the bears earlier in the day, but once Jerome Powell came on, it was very clear that the bulls really, really had something going on. I'm going to talk about what the potential for that upside is, the medium term, right? My perspective on it, and what else we have going on in this market right into the end of the year and into next year as well. Some of my thoughts, because there's going to be a blackout period until we see that FOMC in December. We have a few weeks until that. It is December. It's December 1st. We got a few weeks until mid-December where we're going to see the FOMC. So volatility, right? Volatility came out naturally. The speech from Fed Chair Powell on Wednesday, yesterday, sent markets flying higher amid signals that the central bank could begin slowing its aggressive rate increases, which is something that we pretty much already knew. Now, the one kicker here is that we knew a lot, if not all, of what Jerome Powell had said yesterday, but the market just reacted super, super bullish to that. When the dust settled at the end of the session, the Nasdaq was up about 4.4%. The S&P was up about 3.1%, and the Dow Jones 2.2%. I don't. Okay, so obviously these were massive, massive rallies, but I don't necessarily think that this is the reaction that the market would have from a very concise Fed pivot, quote unquote, as we're about 80% chance of a 50% base point, 50 50 basis point, not 50%, 50 basis point hike, confuse myself, on December 14th with a 20% chance. Wait, what the hell am I talking? An 80% chance of a 50 basis point hike and a 20% chance of a 75 basis point hike coming out in December 14th, right? Those are the expectations. It hadn't really changed that much realistically before the meeting compared to after the meeting. And Jerome Powell warned that the Fed might have to retain restrictive policy for some time, as policymakers needed to see substantial evidence for falling inflation. He buoyed the markets with a less hawkish stance on the pace of interest rate hikes by raising hopes of a softer landing that is very plausible, he said. It also makes sense to moderate the pace of our rate increases as we approach a level of restraint that will be sufficient to bring down inflation. So he's talking about really cutting back on the aggressive rate hikes. That was one of the main criteria that really did send this thing higher. It's not something that we didn't know, right? Time for moderating the pace of rate increases may come as soon as December. Okay, we knew that again. And the Fed chair also said, despite some promising developments, we have a long way to go to restore price stability. So he also said, my colleagues and I do not want to over tighten because cutting rates is not something that we want to do soon. Yet markets rallied aggressively. The truth is that the path ahead for inflation remains highly uncertain. That's why we're slowing down and going to try to find our way to what the right level is. It can't be that we can go on for 5 years at a very high level of inflation and it doesn't work its way into a wage and price setting process pretty quickly. That is a serious concern. So again, things that we naturally knew, right? Things that we naturally knew and things that aren't necessarily a shock, but market deemed it as a little more dovish than anything. So Jerome Powell also mentioned yesterday, there was a quote somewhere, I got to find it. The Fed has been pretty aggressive, but it does not feel it is appropriate to crash the economy and clean it up afterwards. I think the way that this is seen is taking more of a precautionary note that they started to begin the over tightening process without really an end in sight. And right now, they're kind of letting things play out after two decreases in inflation, right? Two prints that dropped inflation off a little. So we've seen kind of a peak, and they're kind of pulling back on the aggressiveness, taking a more subtle approach to see kind of what happens for them to act accordingly in the coming months. So I don't necessarily think that we're going to bottom out right now. I don't necessarily think we go from all-time highs from here, but so far the market is rejoicing in this, and we could see periods of maybe a little more upside before we start really testing the waters to the downside. Because from an economic standpoint, I think there is lows to be met just yet, right? I don't think that the bears are done with this, and I don't think that necessarily it has to be a super huge mega crash and correction, but I just don't see that the economy has stabilized itself in inflationary aspects, in quantitative tightening aspects, in job aspects from company perspectives, right? Supply chain issues and all that kind of put together. We still have the potential for a little more downside to come before we can start bottoming out and seeing those all-time highs being reached. Now, having said that, right, we've crossed over the 200-day average. We're up over the last 2 months about 13%. In relation, these things that kind of come together usually bring out a continuation, right, into the next year that will guide the bulls per se. But there are a few things to keep in mind, right? The yields, right? The bond market, that's something of a nuisance for the bulls still. So there's still a lot of risk appetite that has yet to be um, softened over, if you will. There's also other news out, right? We have a few other things, right? That's the main thing that I wanted to talk about today. There are some other news outlets, right? There's earnings that came out for CRM, right? Some of these tech names, we're going to see earnings that pop up into the next few quarters. Also, semis, right? It's been quite a long wait, but Tesla's electric semi truck is about to see the light of day. So the company first unveiled the concept of the Class 8 tractor in late 2017 without expectations to commence in 2019, but since the production version has been delayed several times. And today's Giga Nevada, where the semi will be produced, will see the first electric truck delivery to Pepsi, which will be the vehicles. There will be the vehicles used at Frito-Lay plants and beverages facilities in California. So we'll see how that shapes up. We also have to see how the railway stuff shapes up. Some of the biggest, there's also some deal book summits right in 2022. Some of the biggest names in business are being interviewed at the New York Times Deal Book Summit, where every topic is fair game and no question is out of bounds. Amazon CEO Anthony Jassy was the latest to take stage to go under the spotlight, providing some important insights into the company and the overall economy. So not only is Amazon one of the biggest employers in the country, but it can easily size up trends taking place across the retail space. While Amazon Web Services, responsible for the bulk of the company's profits, supports nearly a third of all cloud businesses. So we got a breakdown from a few different standpoints, right? From an economic environment, it's very clear that consumers are spending, but they're being very careful, trying not to stretch their dollar, right? Inflation, naturally. People care a lot about getting a bargain right now, and they were attached to stocking stuffers in an even more pervasive way than normal. So we also have layoffs to talk about, labor, all that stuff. But realistically, it's going to go day by day and into the end of the week. Uh, Let me just see. We had some PCI and some weekly employment numbers that came out. Tomorrow is the all important non farm number that can spice things up again, naturally. But right now, as it stands, we got to pop into the 405 area, right? 405 is where things get very interesting in the S&P 500 futures. We pretty much rejected right off of that level, the 405s, where we start a new distribution to the upside. So if we manage to accept above 405, there is going to be some interesting movement in this market, and I think the bulls can take it a little more. I don't necessarily think that the bulls are super done just yet with this after they got a boost from yesterday, but it's something cautious to watch for into the non-farm payrolls tomorrow. We also have a decent bit of news that comes out today, starting at 9:25 and 9:30. We have two Fed speakers, Logan and Bowman. 9:45 p.m. PMI manufacturing. 10 we have Kashkari. At 10 ISM as well. Construction spending. 10:30 EIA natural gas inventories. 3 we have another Fed speaker, and then 4:30 a Fed's balance sheet. So with that being said, right, I don't really know how it's going to pan out today. I'm leaning a slight bit more to the bull side to see what they can muster 4105 is a huge, huge level on the S&P based on the distribution block. So it's on the futures, something that you have to watch out for. Martin, did I hear some rumors about ticker COSM? No, I have not, unfortunately. Sorry to disappoint, but I don't even know what that is. So with that being said, I hope everyone has an amazing day, about to end out the week, and I'll see you guys tomorrow to wrap up the week. Thank you so much, and we'll see how this pans out for Jerome Powell's upside from yesterday. Take care and good day.